Hey, in today's video we're going to cover this uranium macro update that was released on January the 9th. They made some very interesting points and I would just like to go over them in this video. So initially they start off with their concerns regarding the enrichment price of uranium, which more than doubled last year. And I feel this is a good point to make because I also think utilities were more worried or wanted to address the enrichment aspect of uranium rather than actually securing the base metal supply, given the events that happened in Ukraine and Russia. And this was actually vindicated as the price did more than double last year. And they're expecting that this would have a cascading effect down to the uranium base metal price after this has stabilized. They also mentioned that underfeeding to overfeeding at the enrichment level, it will add an additional 20 million pounds of uranium demand. This is on top of the already 80 million pounds of uranium demand expected this year. They also further reframed that Sprott Physical Uranium Trust has regained its net present value premium. This allows Sprott to issue more shares and basically buy more uranium. But they also highlight here that the spot market volumes remain exceedingly thin. Mention here that they see that the uranium equities have actually underperformed the base metal price by around 35%, and they're expecting a mean reversion of this, and they're expecting this to revert in 2023 with a excellent setup trade that they're coining catch up trade. Yeah, so in this section they kind of just account again about the uranium enrichment price. They speak about Russia accounting for around 27 to 40% of the uranium conversion and enrichment facilities, which boosted the price of the enrichment and conversion processes by 167% and 120% last year. And they also note that this has created a race on dynamic for the Western allied countries, which have actually tried to address this issue by approximately pledging 1 billion in funding to support this initiative of being able to enrich and convert uranium rather than relying on Russia in this case. Again, their overfeeding estimates is that they foresee that a minimum of 20 million pounds of demand will be added for given this scenario. Carrying on with this theme, they mentioned that they're expecting some of these, I don't know what you would coin them, let's say facilities that enrich uranium and convert it to restart in the middle of 2023, which would then free up the enrichment facilities to overfeed. And this would set up the dynamic for the enrichment and conversion prices to normalize. They foresee them to actually come down, which makes sense because you've restarted some facilities that can do that. And they're expecting this to finally cascade down to the uranium base metal price, as I believe they're probably expecting utilities to start to scramble in being able to meet their requirements, as mainly they were focused on that enrichment process. So let's take a look at this chart. It's quite interesting. So they're expecting that there's going to be a steady increase in the demand for uranium up to 2040, exceeding well over 250 pounds of uranium required. And this is taking into consideration all of the new builds that are happening in India and China. As you can see, we barely meet the requirements of uranium supply or demand, at the 2030 level. And it's also interesting to note that the only new mines or planned new mines will actually be able to produce uranium at the earliest is 2028. So that means from now till 2028, if these mines actually miraculously are on time, there's really going to be no new uranium mines producing new uranium. So uranium supply will be in quite a deficit for a few years. So now the main thing most of us are interested in is actually the uranium price. So they mention here that available in terms of available for supply material, the spot market remains extremely thin. They also suggest that Sprott estimates that it has already cleared out almost all of the secondary U3O8 supply that was available. So the takeaway here is that if Sprott does manage to hold its premium to its net asset value and it is able to keep raising capital, it's gonna find it extremely hard to actually buy uranium or find secondary supply of uranium. which will indeed, of course, force them to bid higher. And I expect utilities would be in competition for this as well. So this could really have a effect on the price of uranium. And they also indicate that they see it going meaningfully higher as there is a shortage of physical material in the market. So as mentioned at the start of this video, they are expecting a not reversion trade, but a catch-up trade in 2023, where last year the equities or uranium stocks like underperformed the spot price of uranium by 35%, and they're expecting this to swing the other way this year with them playing catch up. They mentioned that both expanding nuclear power output globally and pivoting away from Russian energy, we are maintaining our short 12-month spot price forecast of $75 per pound of U3O8 and a long-term price deck of $85 per pound of uranium. So this is I think this is a net asset value of each of these companies. Interesting to see Denison is actually extremely undervalued here, just based on its net asset valuation. So that's quite nice. That's actually really nice to see. Down below in this chart is actually the predicted price targets. So they're expecting Cameco, if we stick with the Canadian prices, 41 share price for Cameco with a buy rating. Denison Mines at 525. Oof, if Denison gets up to there, man, that would be amazing, and I would have made a boatload of money, as Rick Rule says, boatload of money. Everything is a buy. I don't know what this S stands for, but yeah. And Sprott at, where was it? Sprott at 75. They're expecting its net present value of 25 Canadian dollars. And down below you can actually, I will link this PDF in the chat, so you can actually click on these links if you're interested to read about these individual companies. That's quite a bullish outlook for uranium. Some good points, but to be clear, this equity research has been bullish on uranium for a long time now. Even last year, I think they were talking about it, utilities or spot price, targets, etc., which given the macro environment of the Fed and everything, didn't really play out. But hopefully, if we're in this, like I've been watching some videos about transitory Goldilocks environment, if we stick with this kind of environment this year, yeah, I think we could see some really nice moves in the equities. But I'm still in the uranium trade. It's been a long trade. It's been at times frustrating, but I think in the end it will pay dividends.